Hello everyone and welcome back to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec, looking at euro dollar, which has had a couple of positive candles coming through. It's interesting that the market has been chopping around a little bit today as focus returns to how the economies are performing with the services sector PMIs in focus. Now, the Eurozone services sector PMIs have been disappointing, and the composite PMI also dragging back to 50.1 for the Eurozone doesn't really paint a great picture, although it's interesting that in the last few minutes, Euro has actually started to pick up quite strongly. Interestingly enough, 109.65 is a key level of resistance. Decisively breaking clear of that, I think, is a near-term breakout. But you can still say that this is trading within this downtrend channel, and another recovery in this trend channel is likely to still be seen as a chance to sell, because all these momentum indicators they've picked up on a near-term basis. Stochastics, MACD and RSI mid-40s, but generally speaking they are still negatively configured. RSI failing around the 50 point generally, MACD as well failing underneath neutral. So this is a near-term upswing that again is just taken off a little bit in the last few minutes, interestingly enough, but I don't necessarily think it's going to be sustainable. I think that there is still this downtrend channel. There's still the tendency for rallies to be sold into, and I'm not convinced that this rally will be going too much further before starting to sell off again. You've got this overhead supply that I suppose starts to come in around 10 big figure again, this old range 10 to 11, 110 big figure to 111 big figure, 110.25 interesting being the old low, and subsequently the highs from last week. It's basically around about where that trend channel starts to come in now. So this little technical rally that we've seen on euro dollar, I'm not expecting to last especially long. Now, as I said, moving above 109.65, which had been a basis of resistance, moving above that level today could create a little bit of a short squeeze initially, and that could, as I said, drive the market up towards 110 big figure. But as I said, I don't necessarily think that this is going to be the start of a decisive recovery in the euro, especially considering how disappointing that those PMI data were this morning. So as I said, I'm still playing out this downtrend channel. I still think it's intact, and the fact is that it's just a near-term recovery within that channel, and subsequently I think will provide another selling opportunity. Now, in terms of where the selling opportunity could come in, let's have a go at just doing a little bit of a technical rally for the fib level and where that comes in. Yeah, again, 50% fib is at 109.90 area of that sell-off, so rebound towards 110 big figure is perfectly possible now. 109.65 being a 38.2% fib, we've just moved through that as well. So I think, yeah, we're moving towards 110 big figure potentially now. If that 109.65 breakout isn't just a brief blip to the upside, if it is sustainable, then 110 big figure could well be seen. But as I said, 110.25 area is sort of building up the key resistance. So I wish you good luck in your trading today. Click here to subscribe to our analysis videos, and also go to our website where you can sign up for our webinars.